Hi everyone, welcome to this insightful session by WERT Finserve. I'm Anurag. Today we are diving deep into the shiny metal that refuses to fade, and I'm talking about gold. And yes, who better can help us to unpack it than our own founder and investment strategist, Mr. Prithvi Potta. Welcome, sir. Thank you for being with us. Let's get started.
Thanks, Anurag. Let's make this an exciting, discussion.
Sir, gold has always been a safe haven during global uncertainty. How do geopolitical tensions impact gold prices?
That's right, Anurag. Gold always acts as a thermometer during any uncertainties across the world, be it financial crisis or geopolitical tensions. Let's look at the recent wars that have happened, whether it is the Russia-Ukraine war or the political instability in Middle East or even the US-China trade war. Gold has seen a spike during these crises because gold is perceived as a safe asset and it's a hedge against all the uncertainties.
Which connects to an interesting observation regarding the gold's historical price action. Yes, sir. I noticed that between 1980 and 2004, gold prices were relatively flat. But from 2004 to 2025, we have seen a massive appreciation. Why this sudden shift?
See, historically, if you see, Anurag, from 1980 to 2004, the world financial system has been in order. While the start of 1980s, US had a lot of inflation, but then higher interest rates led to lower inflation, and because of the stability in financial order and lower inflation, gold hasn't moved between 1980 to 2004. But post 2004, things have changed. We had 2008 financial crisis. That financial crisis led to banking crisis across the world. And what has happened is during that phase and post that phase of 2008, US and other major economies had resorted to printing of currency. That is called quantitative easing. That quantitative easing had extended till 2019 during COVID time, where US had massively printed money. Not just only US, it is Europe as well as Japan. This has led to spike in gold prices post 2008.
Now let's talk about one of the most consistent sources of gold demand. How much of a role does jewelry demand, especially in countries like India and China, play in driving gold prices?
But consistently, I would use the word consistently. The reason why I'm using consistently is 50% of jewelry demand comes from countries like India and China. Look at India. Gold is just not an asset class for investing, it's sentiment. Whether it's wedding, festivals, or small savings, people in India tend to buy gold. I don't see gold demand coming down from countries like India and China because this is cultural. While when gold prices move up, the per ticket jewelry might come down, but then the demand is always consistent.
Sir, one interesting observation: why central banks have bought more gold in the last 4 years than in the previous 21 years?
Okay, this is very interesting, Anurag. What is happening across the world is that central banks have been mopping up gold for the last 4 or 5 years. Just to give you one statistics, between 2000 to 2016, central banks have bought gold close to $85 billion. But in just 1 year, that is 2022, central banks have bought gold nearly $84 billion. In fact, last 4 years, every year central banks have been buying almost 1,000 tons of gold, which is like 1/4 of the mined gold across the world. You know why? Because there's been an instability in the dollar system. Central banks generally invest money in dollar and US treasuries. With uncertainties across the world, especially in US economy, dollar, and US unable to reduce its debt, central banks have perceived that gold as a asset class which is more safer than US dollar. In fact, countries like China, Brazil, Russia, Turkey, and India have been buying a lot of gold. This has in fact led to the surge in gold prices in the last 4 years.
Interesting, sir. So how do you see gold prices moving forward in the next few years?
See, Anurag, I think gold prices in the short term might be volatile. I would again say a word might. But in the long term, gold prices should appreciate. The reason being is the world financial system is still not in order. US debt is still at very, very high levels. US is unable to reduce its debt. That tells us that dollar is still not a safe asset. As long as dollar is not safe asset, I think central governments across the world would tend to consistently buy gold or increase their gold reserves. That's one demand. Second is geopolitical tensions. We've seen a change in world order, especially the world political order. Power systems have changed, power structures have changed. I guess that will also lead to a lot of instability across different continents, regions, and people might feel insecure. During insecure times, people tend to buy gold. So I see gold over a longer period of time. It's a hedge against all these uncertainties, not just only inflation, political uncertainties, geopolitical uncertainties, and financial instability. So gold prices on a long-term basis would tend to appreciate.
One last question, sir. So in today's digital era, apart from digital assets like cryptocurrencies, which are unregulated in India, and equities, how relevant is gold for young investors, sir?
Absolutely, Anurag. Every asset class plays a role in the portfolio allocation. Stocks are for wealth creation, real estate is safety, crypto is innovation, gold is an insurance. 5-10% allocation of gold in asset classes in your portfolio, I would say, is necessary. Gold might not be 10x overnight, but at the same time, it might not go down drastically either. Yes, it might be a little bit volatile due to currency fluctuations or due to geopolitical issues or some due to demand supply situations. But I guess gold can consistently outperform inflation over longer periods of time. This is absolutely the reason why gold is a necessary in all portfolios.
And finally, yes, sir, I would like to know your personal view. Is it a good time to buy gold or not? Because right now we can see that gold has touched a peak of 1 lakh.
And then don't time gold, just accumulate it. Whether you are buying gold through fiscally or investing it through exchange traded funds or mutual funds or even buying the sovereign gold bonds. Whenever there is an opportunity, keep buying it systematically. In fact, I will tell you that you start accumulate it on a monthly basis. If you want your wealth to be preserved and peace of mind, I think gold definitely needs an allocation in the portfolios. Keep buying it.
Beautifully said, sir. Thank you for sharing such deep, thoughtful insights. Thank you everyone for watching this video. Please do follow us. Please like, share, and subscribe. Thank you.